What's up, everybody? My name is Zach Pasquarello, and I am a bookkeeper. I own a bookkeeping business, and I teach you how to do bookkeeping, how to start your own bookkeeping business, or if you're a business owner, I've got tips and tricks for you on how you can do your own bookkeeping. So I have had my own business for the past 3 years, and I create these videos just so I can teach you more about bookkeeping and QuickBooks. So this video is going to be for all of my real estate investors. Anytime you buy or sell a property, you are probably getting a HUD statement. It's very important that you keep these documents digitally organized. That way you can easily access them. And also, it's very important that you do a journal entry on your books anytime you acquire a new property or sell a property. So I'm going to show you exactly how to do that journal entry right now. I have a ton of real estate investor clients, and if you are a bookkeeper, then it's really important that you know how to do these HUD journal entries because this will set you apart from most other bookkeepers. And if you're a real estate investor yourself, it's really important that you understand debits and credits with the journal entry so that you can understand how buying and selling these properties is affecting your balance sheet. So let's not waste any time. Let's jump right into it. Okay, so this is what a HUD statement looks like. This is just an example. I downloaded this off of the internet, and you're going to get something similar to this anytime you buy or sell a property. So this column on the left is for the buyer. This column on the right is for the seller, and I'm going to do both examples. I'm going to try to do it quickly and clearly. That way you understand what's going on. So this is, first of all, we're going to do the buyer. It's a lot more straightforward whenever we're dealing with somebody buying a property. So obviously the first thing we want to look at is this contract sales price. That is the purchase price of the property. So we have here $107,000. So for the first journal entry, we are going to, so you have a couple options. You can just generally put it into a category of buildings, or you can identify the property specifically by the address. So just for this example, we will specifically identify this property as 1 Main Street. So it's a fixed asset and it's a building, 1 Main Street. Okay, so the purchase price of the property is $107,000. So we're going to debit the building for $107,000, and you can make the description as specific as you want. I will throw in here contract sales price for the description. Okay, the next thing we have is settlement charges to borrower. The settlement charges are going to be capitalized, which means we're going to add those settlement charges to the total purchase price of the property. So the property originally sold for $107,000, but we had to spend an additional $3,000 through miscellaneous fees to purchase the property, so that will get capitalized. That's not an expense, very important, not an expense. It gets capitalized and it gets added to the total value of the property. So here we have settlement charges to borrower. Once again, 1 Main Street is the asset, debiting $3,000. Okay, now we have adjustments for items paid by seller in advance. So these are most likely property taxes, and we do not have to capitalize these property taxes. We can expense these property taxes. Typically, I would create a new chart of account for real estate property taxes, but for this example, we would just use this account. It says taxes, and we can get as specific as we want. So we can do $100 for city taxes, $150 for county, and we can do $200 for assessments. Now, I'm going to be honest with you. I don't see this assessments line item too often, and I don't know if that should or should not be expensed as property taxes. If you guys know the answer, please comment on the video. That way other people can know. But for now, we will put it in taxes, and we will give the description assessments because that's what it says on the HUD. So these are expensed. These are capitalized. The contract sales price and the settlement charges are capitalized. So now we have a total debit of $110,450. So now we have the debits done. Now we need to do the credits. So we have a $5,000 deposit or earnest money. So this would have been money that you already spent. So typically So typically a couple weeks before closing, you will pay a $5,000, a security deposit, $3,000 or $5,000. And so in this case, we are going to credit the security deposit for $5,000. The security deposit is an asset account. So we are decreasing the security deposit account by $5,000, and we are taking out a new loan for $90,000. So you can specifically identify this account as maybe one Main Street mortgage or one Main Street loan, or you can throw all of your loans into one loan account and then just make sure you are reconciling your loan accounts on a monthly basis. I would recommend, we'll just do it like this. We will create a new long-term liability, note payable, and we will call it Loan 1 Main Street. Save and close. Okay, so now we have a new loan for $90,000. And then let's see, what else do we have? I think we're almost done here. Okay, so we have adjustments for items unpaid by the seller. We have county taxes for $100. So we are going to credit our taxes for $100. Okay, and finally, last but not least, we have cash from the borrower. So any discrepancy in the debits and credits here will be tied out through a cash coming from the buyer. So we will credit here our checking account for the remaining $15,350. And if we see here in the bottom of the HUD, cash from borrower, $15,350. So in order to close on this property, the buyer of this property will need to write a check for $15,350. And then the last thing I always do, I always add the HUD PDF to the journal entry in QuickBooks. So I add it as an attachment. That way in the future, if you ever need to look back on it, you can look back. It's super simple. So this is how you do a journal entry for purchasing a property. And next, I'm going to show you how to do a journal entry when you're selling the property. Similar concept, but a little bit different. Okay, so to get started, we need to look at our balance sheet and we need to see how much of the property do we have on our books. So we will go to our balance sheet and we will look up 1 Main Street and we will see that is on our books. Let's just say, for example, it's on our books as $90,000. So now we need to credit the asset, and this is a separate example from the first example, so don't think these two examples are related. So we are crediting our 1 Main Street property for $90,000 to wipe it off the books. So we bought this property for $90,000, now we're selling it. So we just wipe it off the books with a credit to the asset account for $90,000. And then we need to look at the loan. So we also need to wipe the loan off of the books. So we will look at our balance sheet once again and we will see that the loan, let's just say, for example, we had $60,000 outstanding for the loan. So we debit the loan account for $60,000. So now the property is off the books, the loan is off the books. Okay, so now we look at the HUD and we see how much money did we receive from the sale of the property. And let's just say, for this example, we received a check for $35,000. So the last thing we need to do is we need to account for the difference in our debits and our credits. So we got rid of the asset, the property, for $90,000. We got rid of the loan, which was $60,000. We accounted for the receipt of the $35,000. Now, what some people get confused, they might think, okay, I received $35,000, so I made $35,000 of revenue. However, that is not correct because we also have to account for the property and the loan. So we might have received $35,000. However, we only actually made $5,000 in income, in revenue. So whatever your income account is called, sales, services, revenue, whatever, you want to credit the remaining difference between the asset, the liability, and the amount of money that you received. And then once again, I always attach the HUD to the journal entry. That way you have supporting documentation. So I hope this video was helpful. Hopefully it kind of explained. Obviously, this is a very simple situation. There are a bunch of other settlement charges and taxes and other fees that could be associated with buying and selling properties. And also, if you are renovating the property, you have to take into consideration all of your renovations that will have increased the basis of the property. And also, you have to take into consideration any outstanding interest on the loan payoff whenever you sold the property. So there are a few other variables that you need to consider when you're doing your debits and your credits for your journal entry, but this is kind of the bare basics of it. You just need to add the building and add the loan and account for the real estate taxes if you're buying a property, and then you kind of unwind everything. You do the opposite. You get rid of the asset, you get rid of the liability, you account for the money received, and then the difference, whatever left over, that is your revenue. So I hope this is helpful.